Hello everyone, welcome to Crypto Mobile Mining and Trading. I am Dixon, and let me give you a quick real-time update after my tireless research to give you the finest. Before we dive into this massive news, do me a huge favor. Smash that like button, subscribe to the channel, and hit that notification bell so you never miss out on critical updates like this one. Your support means the world to me. Alright, let's get straight into it. We have a groundbreaking development in the crypto space. Major financial services group Citigroup has officially partnered with the crypto exchange giant Coinbase. This isn't just a minor collaboration, they are teaming up to explore using stablecoins for cross-border and crypto-to-fiat conversions, specifically for their institutional clients. This is huge. So what does this actually mean for you and the market? The initiative is all about leveraging the power of on-chain stablecoin flows and their 24-hour settlement capability. Why? Because corporate demand for this kind of efficiency is growing at an incredible rate. Think about it. Traditional banking is slow, confined to business hours, and riddled with intermediaries, especially for international payments. Citigroup and Coinbase are aiming to change all of that. Let's break down the key facts. Initially, this collaboration is focused on making crypto to fiat and fiat to crypto conversions much easier. This is a game changer for businesses operating across different countries. Imagine a company in the US needing to pay a supplier in Japan instantly, without waiting days for a wire transfer to clear. That's the power they're unlocking, but it gets even better. In the coming months, Citigroup plans to explore on-chain stablecoin payments directly for its clients. This opens the door to programmable payments. What are programmable payments? Well, it means money can be sent automatically once certain conditions are met. For instance, an instant payout to a shipping company the moment a package is confirmed as delivered. This is next-level financial technology in action, enabling faster, always-on settlement. This move isn't entirely out of the blue. Earlier in 2025, Citigroup had already disclosed that it was looking into issuing its own stablecoin and expanding its crypto asset services, including custody and tokenized deposits. This partnership with Coinbase is a massive, concrete step in that direction. Now, why does this matter so much? This partnership signals a profound shift. We're seeing traditional legacy banks moving deeper into blockchain-based payments and stablecoin infrastructure. For a titan like Citigroup, moving towards on-chain stablecoin solutions brings enormous advantages. First, as I mentioned, it enables 24/7 settlement. The world of finance will no longer sleep. Transactions can happen anytime, any day, not just during traditional banking hours. Second, it drastically reduces the friction in cross-border payments. By cutting out many of the intermediaries and the delays they cause, payments become faster and cheaper. And third, it offers programmable and flexible payments. Using stablecoins for conditional logistics, instant payouts, or tokenized flows gives businesses unprecedented control and efficiency over their cash flow. This move also strengthens Citigroup's position in the evolving digital asset ecosystem, especially as regulatory clarity continues to improve worldwide. They are positioning themselves as a leader, not a follower, in this financial revolution. And what about Coinbase? For them, this collaboration is a testament to their growing influence beyond just retail crypto trading. It solidifies their role as a key infrastructure provider for institutional payments and a trusted partner for major banks. Coinbase isn't just an exchange anymore, it's becoming the foundational layer for the future of finance. Let's put this into a broader institutional context. This isn't happening in a vacuum. Major banks everywhere are rethinking their payments infrastructure because of the explosive growth of stablecoins and the shifting regulatory landscape. Citigroup had already shown interest in its own stablecoin, and the entire banking sector is actively evaluating custody solutions, tokenized deposits, and digital asset payment rails. Stablecoins are increasingly being recognized for what they are: incredibly efficient infrastructure for cross-border settlement. For example, Visa recently announced its own pilots using stablecoins for international business payments. The trend is clear. The giants of traditional finance are embracing this technology. Hey guys, just a quick pause here. If you're finding this information valuable, please hit that like button right now. It really helps the YouTube algorithm show this video to more people, and if you have any questions so far, drop them in the comments below. I read every single one and will do my best to answer. Don't forget to subscribe if you haven't already. Now, of course, it's not all smooth sailing. There are significant challenges and considerations to keep in mind. First and foremost is regulatory uncertainty. While regulations around stablecoins are advancing, banks like Citigroup must still navigate a complex web of AML/KYC rules, custody regimes, and cross-border compliance. This is a minefield they must tread carefully. Then there's the challenge of operational execution. Moving from a small-scale pilot to full-scale production is a monumental task. It requires seamless integration with decades-old legacy banking systems, robust risk management protocols, and crucially, getting institutional clients to actually adopt the new system. We also have to consider counterparty and credit risk. Using stablecoins introduces new types of risks related to the assets backing them, their convertibility back to fiat, and the operational security of the blockchain itself. These are new frontiers of risk management for traditional banks. Finally, client adoption is a major hurdle. Corporate clients will need to completely update their treasury, foreign exchange, and payment workflows to use these new rails. Change can be slow, especially in large, established corporations. Adoption will likely be gradual, not an overnight switch. So what should we be watching for next? First, keep an eye out for the official announcement details from Citigroup and Coinbase. We'll want to know the specifics on the timeline, who the pilot participants are, which stablecoins they'll be using, and which geographic regions will be involved. Second, we need to track the adoption metrics. How many corporate clients actually move from their old fiat rails to these new stablecoin-enabled flows? The numbers will tell the real story of its success. Third, we'll be watching for any regulatory statements. Will regulators in major markets like the US and Europe give their explicit approval or provide clearer guidelines for banks using stablecoins for payments? This will be a major catalyst. Fourth, we'll be looking for updates on bank-issued stablecoins. Will Citigroup move forward with issuing its own token, and how would that fit into this collaboration with Coinbase? That could be another major development. And finally, we have to watch the competition. How will other large banks like JP Chase, Bank of America, or payment networks like SWIFT respond to this initiative? You can bet they are not sitting idly by. This move will surely trigger a response. So let's get to the bottom line. Citigroup's move to partner with Coinbase to explore stablecoin-based payments is a landmark event. It's a significant step in the banking sector's adoption of blockchain-enabled infrastructure. By focusing on crypto-to-fiat conversion, on-chain payment solutions, and 24/7 settlement, Citigroup is positioning itself ahead of its peers in the grand transition to digital asset-enabled corporate payments. However, ultimate success will hinge on getting that regulatory clarity, achieving widespread client uptake, and flawless operational execution. This is a marathon, not a sprint, but the starting gun has just been fired, and it's incredibly exciting to watch. Thank you so much for watching all the way to the end. I hope this update was insightful and gave you a clearer picture of what's happening at the highest levels of finance and crypto. Once again, I am Dixon. Please don't forget to like, subscribe, and hit that bell button to stay ahead of the curve. If you have any questions or topics you'd like me to cover, leave a comment below. I promise to catch up with you in the next video with more real-time updates. Take care.